everyone, Les here from BG Trading. Hope you are well. Today is May 17th, 2023. I'll be analyzing two lithium stocks that are still trading on what we call technically fair price. Not on a FOMO area, but also not at technically discounted prices anymore, but it's still technically fair price for us, depending on the stocks and the levels in which the stock price is sitting. It's not a bad opportunity, and that's why I'm brought into this video today. Okay, so obviously one of these is Arizona Lithium. The other one I'll be talking through the video. And also be analyzing the ASX 200 index, which is kind of weak, very weak compared to other index out there. And my overall updated overview of our market, our top 200 companies index. So let's have a look. I just want to remind you, this isn't a financial advice, just from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, how we use our strategies to aim for 20 to 40% profit within 1 to 3 month lead time, and much more. So if you're interested, we also have a free Facebook community, which we call Buy, Grow, and Sell Strategy for Share Traders. In this community, post a lot of great quality content and a fantastic conversation with our members, some access to our stock analysis that are only exclusive for VIP members. Sometimes we share here in this community. We also post our results here so people can see how we trade, when we trade, and track how effective is BGS20 strategy. Yes, and this video also a continuation of yesterday's video that answers another member, which is again this Tasmania May Ken. They asked also about AZL, and that's why I'm going to Arizona Lithium, because they matched as well with what we are looking for. So let's start with Arizona Lithium first. So this is a very small cap. Market cap is around $120 million. You know that we avoid trading nano caps, and most of the time we don't trade large caps simply because they don't swing enough, and nano caps because they are very dangerous. They have no liquidity and no trading volume, making a really dangerous trade that most of the time does not even worth taking exposure at. Okay, so Arizona Lithium is a lithium explorer and developer based in Arizona, US, and there's a lot of things going on in this company, and that's why I want to exploit this stock again. We did trade a few times back in 2022, and our last trade we had to take stop loss. Again, stop loss is part of trading sometimes, you know, and that was based on the lithium price correction as well. So it took a lot of stop loss on the lithium price correction, which is fine. But now I have bought them back. So Arizona Lithium has recently acquired a major brine project in US, which is very interesting. They are going to produce a lithium hour brine, and most recently they announced as well about the final stages of its research facility. The research facility will allow a lot of part manufacturers for EV batteries to have access, and potential they can partner with some of those EV battery manufacturers, which is exactly what we want to see if we are holding this stock. Okay, so a lot of things are going on in Arizona Lithium, so it's an interesting stock to have at the current price according to our strategy and according to our overview of this particular company. So if you're interested, I recommend to go through the website and take a look in this last presentation. Obviously, the company, like any explorer, presents a lot of risk of financial risks. They will need to continue partnering with other companies or raising capital through the market until they actually able to generate a organic revenue out of a Sandy project, which is its flagship project. And lastly, just before I move towards to the technical aspect, another thing I like this is because they are based in the US. It's not in Africa, not in China, not in Asia, or anything. In the US, which is a very good place to be based and very close to a lot of those EV manufacturers as well. So very strategic location right here for Arizona Lithium. Now, let's have a look on the stock price. Okay, if we using BGS20 strategy KPIs and indicators, that green ball there, the green circle there, green circle indicates a bullish intersection level 1. Bullish intersection level 1 is our third indicator that the stock is bouncing back. The first indicator is what we call green candle on Heikenach, which is itself a indicator, and then we read that as the downside momentum being finalized and now reversing into the upside. And also that was followed by bullish intersection level 2, which is exactly the candle crossing the yellow line, which is our indicator EMA 9, crossing the yellow line and trading above the yellow line consistently for the next few trades until obviously the yellow line itself crosses across the red line, which is another indicator. So obviously, if you want to learn all those indicators, we have an online trading course that you can always buy online and take the course as many times as you want after that. But also I like the fact it's the stock price has tested its sort of a 4.2 cents levels, and then has again bounced back from not from just from March, but again this time here in May. And as a result of lithium stocks going up, most of obviously the leading stocks always goes up first. I say that into our iron ore video last week. The leading stocks tend to go up, and then once we profit out of the leading lithium stocks, which we have been doing over the last few weeks with core lithium CXO, now we go to those not so leading in this case on a speculative spectrum of those stocks. Okay. And that is Arizona Lithium now with bullish intersection level 1, level 2, and the green candles popping up consistently on the upside with large volumes. Although there's this massive large candle here, the volumes it's relatively large for normal, not as large as I would like to, but it's still looking very interesting for a potential entry. Time to speculate this type of stock is when they are trading like that at low levels. You don't want to be buying those speculative stocks when they are here back at SMA 250 because that will be too expensive. The other lithium stock that hasn't performed well is Sayona Mining. And one of the reasons that hasn't performed well is simply because they have started producing in March 2023, and there was some downgrade by some of the analysts have downgraded Sayona Mining. And that particular downgrade has actually contributed for the stock to underperform the others. But now that the others, such as Orkin, PLS, CXO, even Lake Resources has outperformed really well in the lithium space, then I'm very interested on look at what are the ones that has not performed well. And that's why we brought this video again. And Sayona Mining is one of them. And provided they are now producing, they are ramping up its production. We might see some off-taking agreements within the next few months as a result of its production ramp up. I think there is a great chance for us to see a rally continuation from these few green candles that we saw there in the last couple of weeks. And that, provided that the stock is still trading at SMA 250 levels, bring us back to our strategy indication that is trading at technically fair price, not at formal levels. And any stock that's produced and is not trading at the formal levels, I like that in the current environment that lithium has been bounced really strongly. So I would say Sayona mining will be looking at around 30 cents level to exit from now. And I think this is a very interesting chart to look at. I will see in the past, back in 2022, April, like more than a year ago, the stock has reached 36 cents and wasn't even producing, almost 40 cents, wasn't even producing. So you see, here we go, as they develop, they keep exploiting and amplify, sort of growing its mining size, and we will see a lot more going on in the share price. Okay, so they are funded now for this. They have recently done a capital raising, and that is something that's positive for Sayona mining, even in comparison to Arizona Lithium, as we just saw it before. So two stocks to look at: Sayona mining, Arizona Lithium. Now let's take a look on the index S&P SX 200. So the code is XJO. Hey, I've been saying that I'm very skeptical about the overall Australian index for quite some time, and if you've been following us in this video, you know the reasons. Material stocks and financial stocks going down. They're mostly exposed, as material stocks and financial stocks going down. They are halfway on this index. So this, which brings back to the chart formation, underperforming the Nasdaq, for example, which is most tech stocks, but it's still offering good opportunity in tech stocks here and growth stocks here in Australia. But now, obviously, growth and tech stocks, they are not very heavy on that, and then they won't really affect, even if they go up, they're not going to really affect the index in order to pull the index up. So in this case, we have what we call the red candle trading under the yellow line, and a potential bearish intersection level 1 and level 2 here. And if we see another red candle, that will look pretty bad. And again, I'm expecting to see the S&P and SX 200 back in 6,800 levels, and hoping, and this is a hope now, because if that happens, if what I'm going to say now happens, we're all going to be taking a lot of stop losses, which is not a good thing. But we could even potentially see, if some bad news starts sparkling, like mortgage cliff or further banking crisis in the US happens, we will see further degradation in our banking stocks, and then we might even see the SX testing its lows here in September and July low before the most anticipated massive rally that everyone's talking about. I think we're gonna have a big pull down, so just be careful. Make sure if you're trading speculative stocks, have stop losses, and don't get exposed to much when the market's going down. There's ways to profit out of falling markets. If you are following us long enough, you know that we've been talking about some ETF hedging funds. Our VIP members know exactly what are those funds, and we are exposed in one of them already. So, and not in order to make a lot of money, but at least to protect our overall portfolio value over during what we could say a downturn. Okay, so just be careful with finance and material stocks for now. Unexpected rally on retail stocks this morning. For me, honestly, isn't expected, provided that we might have some recession ahead. Obviously, those stocks, they talk about Centire and Temple Webster, which are stocks that we are looking to enter again, but unfortunately, they went up a lot. So we've been trading those stocks quite a few times since 2022. But you know. It could be a bull trap. I don't know. Whoever is in the stock, so congratulations. But I'm not going to be buying those stocks now. So retail stocks are still a good buying opportunity when they are down at buying levels, but not when they're at formal areas. Guys, this brings our video to the end. Hope you enjoy. Hope you that makes sense for you. So if you disagree with us, put at the comments below. If you don't like the video, just press the dislike. That's fine. And if you like the video, share with your friends, with someone that you think would be interested, would be helping with that. Okay, so thank you very much, and I'll see you in the next video. Bye. The whole idea when we designed BG Trading BGS20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.